Hi students, welcome to the video on financial accounting. Topic is accounting for depreciation. So, what are the glimpse of the topic? We'll discuss definition, characteristics, and need for charging depreciation. What are the causes of depreciation and methods of providing depreciation and its accounting treatment. So, the accounting process of gradually converting unexpired cost of fixed asset into expenses over a series of accounting period is called depreciation. So, depreciation means permanent decrease or diminution in the value of asset due to wear and tear means use, affluction means passage of time, obsolescence, outdated. So, what are the causes of depreciation? First is physical, second is functional. So, under physical, it may be due to wear and tear means use, destruction or decay. Then, under functional, it may be due to obsolescence means outdated or the asset is now inadequacy. Then affluction of time means passage of time. Depreciation means it is applicable for wasting asset like coal and lubricant. Once coal is extracted, oil is extracted, then the value is zero. That's why depreciation is 100% depreciated. Then exhaustion. So what are the needs for charging depreciation? First, in order to have correct classification of profit, all of you know that the main purpose of running any business concern is to calculate the actual profit and loss arising out of running a business and the true and financial view of the financial position of the concern as on a particular date. So first, we will charge depreciation. That means we will decrease in the value of asset and we will recover it out of profit loss. So we will show it as an expenses under profit loss due to various reasons. One is correct classification of profit. Second, true and fair view of balance sheet. Third, accurate estimation of cost. The distribution of dividend out of profit only. That means when we will calculate the profit, if we not take into account the depreciation, then profit will be inflated. As a result, the company has to pay more dividend to the shareholders. So, it is also essential for distribution of dividend out of profit only. Then, for replacement of asset, if you will not accumulate depreciation, keep depreciation year after year, then after a certain period of time or after the expiry of the estimated period of the asset, when we need the replacement of the asset, that old asset will be replaced for, we will get the new asset, then we may face financial crisis. If we accumulate depreciation year after year, then after a certain period, a lump sum, big amount is with us so that we can replace it with a new asset. Then saving in income tax. If we are charging depreciation, as a result, net profit will reduce. When net profit will be reduced, then we will pay less income tax to the government. Our business will show profit. Then what are the methods of recurring depreciation? We will follow two methods. When there is no provision for depreciation, account is maintained. Under this method, we will only open one asset account and depreciation account, profit loss account. Then when provision for depreciation account maintained, we will prepare one asset account and another provision for depreciation account, then depreciation account. So, there are various methods of charging depreciation. One is fixed installment method or straight line method or original cost method. Under this method, every time the asset will be charged of a fixed amount. Suppose we are purchasing an asset paying 10 lakh we estimate that asset will run for 10 years. So every year we will charge 1 lakh as depreciation. That means we will recover from the profit loss 1 lakh. Every year after 10 years we will recover 10 lakhs. As a result, it will be beneficial for, it will be utilized for replacement of a new asset. Then under diminishing balance or reducing balance or written down value method, every year asset value will be reduced. That means original cost minus depreciation is the book value of second year. Then again on book value, then depreciation at the rate of suppose 10% charge. Then again the book, we will arrive the book value, and that will be the base figure for third year. Like this will continue. The difference in two methods is that generally in a business we incur depreciation and repair and maintenance of the asset. At the initial stage, the assets needs less repair and maintenance charges. So if we follow the fixed install method, then it will be unjustified, and we will not, that means depreciation plus repair and maintenance expenses will be more when it should be equally charged under diminishing balance method. Because under diminishing balance method, suppose the value of asset is 10 lakh, if first we will charge 10%, first year 1 lakh, straight line also 1 lakh. Second year, the book value of the asset under reducing balance is 9 lakh, then we will charge 10%, 90,000. Suppose second year we will incur repair and maintenance 10,000. So total of depreciation plus repair and maintenance will be 1 lakh. Whereas under straight line method, it will be 1 lakh, that is a fixed amount, plus 10,000 as spent under the repair and maintenance charges. As a result, we will debit the profit loss with 1 lakh 10,000. It will be very unjustified after suppose 9 year. On 9 year, the value of depreciation is suppose 1 lakh, and the maintenance cost is also 1 lakh. That means it is 2 lakhs. Whereas it is more or less 1 lakh 20,000, 30,000, whatever that may be under diminishing balance method. As for the Income Tax Act, diminishing balance method is justified. That means the business has to follow the diminishing balance method for charging depreciation for income tax purpose. Then we will discuss what are the accounting treatment, journal entry in case of no provision for depreciation is maintained. No provision for depreciation is maintained means we will do like this. Suppose we will purchase one asset. Suppose that is machinery. So machinery account, suppose it is 1st April 2020. Then machinery account debited to bank. We will purchase one machinery first. So machinery account debited 10 lakh to bank, being machinery purchased by check. Then at the end of the year, suppose 10% depreciation will charge at the end of the year, that is 31st March 2021. Depreciation will be 1 lakh. So we will write depreciation on machinery account debited, that is 1 lakh, to machinery accounts. First, why we are debiting depreciation and crediting machinery, again I am explaining. It is the basic of journal. That means under traditional method, the depreciation on machinery is nominal account. For nominal account, the rule is debit expenses, losses, credit or gains and income. That's why we are debiting depreciation on machinery, that is 1 lakh. Then machinery, we are following the modern method of accounting. Under modern method of accounting, increase in assets should be debited, decrease in assets should be credited. As a result of depreciation, the value of machinery decreased to the extent of 1 lakh. That's why machinery is credited. Then all of you know, all nominal account closed by transferring to profit and loss account. So it is on at the end of the year, that is 31st March 2021, we will transfer the depreciation to profit and loss account. So profit and loss account debited, that is 1 lakh, to depreciation on machinery. Depreciation on machinery account. So this is in case of we are following we are charging the depreciation where no provision for depreciation account is maintained. Second year will follow same thing, that is depreciation account debited to machinery 1 lakh, then at the end profit loss account debited to depreciation, that we will do on 31st March 22. Then till the asset is sold, we will follow the same procedure. Suppose in 2024 the asset will be sold, then we will charge, suppose at the end we will charge the depreciation to machinery, then machinery account will be sold, we will sue. So we will write bank account debited, that is the sales proceeds. Then to machinery, we will see what is the book value of machinery on the date of sale. Suppose the value of machinery on the date of sale is, suppose after 4 years, 4 lakhs it is charged, 6 lakhs, suppose it is 6 lakh machinery. We are selling at 6 lakh 50,000. So difference we will charge to profit and loss account, that is to profit on sale of machinery or to profit loss account. We can write to profit and loss account hyphen profit on sale of machinery, that is 50,000. If we are selling at 5 lakh 50,000, then suppose the cost of the machine is 6 lakh, we are selling 5 lakh 50,000. So difference is we will debit loss, that means profit and loss account will debit for 50,000 hyphen loss to machinery. This is all. That means 5 lakh 50,000, bank account debited 5 lakh 50,000, profit loss account debited 50,000, to machinery 6 lakh. So book value of machinery was 6 lakh, it is disposed of. This is the first method. So under second method, what we will do? We are following, suppose second method, diminishing balance method. Under diminishing balance method, what we will do? First year it is okay, we will charge machinery to bank will purchase, then we charge the depreciation, then depreciation will write depreciation on machinery account debited 1 lakh. Same method will follow, it is nominal account, debit all expense losses, so we have debited depreciation machinery. Then will follow the modern method, increase in assets should be debited, decrease in assets should be credited. As a result, the value of machinery decreased to the extent of 1 lakh. This is, if we are following second method, instead of doing this, we will charge depreciation to provision for depreciation. This is the difference only. So instead of debiting the crediting machinery, we will write to provision for depreciation. That means depreciation machinery account debited to provision for depreciation account. So it is 1 lakh. So instead of reducing the value of machinery year after year under second method where provision is done, then we will transfer the depreciation to provision on machinery, and depreciation on machinery is nominal account, it will be closed by transferring to profit and loss account. So profit and loss account debited, that is 1 lakh, to depreciation on machinery. This is first method, first year. Depreciation on machinery account. This is 1 lakh. So this is first year. So second year we will consider, you see for second year what we will do? Here at the end of the year, suppose second year means it is 31st March 2022. So we will write depreciation on machinery. that is 10% on book value of machinery. So depreciation on machinery account debited. So it is 10% of 10 lakh minus 1 lakh. Means first year we charge the depreciation 1 lakh, so the book value of the machinery reduced to 9 lakh, so 10% 9 lakh. Instead of 1 lakh under in second year under original cost method, in the reducing balance method, we will charge depreciation 90,000 and we keep it in the provision head to provision for depreciation. Provision for depreciation account, that is 90,000. Then we will write at the end of the year again, we will close the depreciation, transfer it to profit and loss account. Profit and loss account debited, that means 90,000 to depreciation on machinery, that is 90,000. Suppose the third year at the end machinery is sold. So 31st March 2023. So our depreciation amount is 9 lakh minus 90,000 for 10%. So write 8 lakh 10,000 depreciation on machinery debited. The amount is 8 lakh 10,000 10%, 81,000 to provision for depreciation account. Amount is 81,000. Then the depreciation nominal account, it will close to profit and loss account. So profit and loss account debited, amount is 81,000 to depreciation on machinery account, that is 81,000. Then the asset will be sold. Now you see what we will do under this second method. So machinery purchased for 10 lakh. Now we will make the or prepare the ledger accounts. First under straight line method we prepare. So under third year and also if machinery sold or disposed of in the third year under reducing balance method, we also prepare the ledger. First under straight line method, we will prepare two accounts. One is machinery account. Then open. It is supposed on 1st April 2020. So write machinery account debited to bank account. This is the cost of machinery. Suppose it is 10 lakh right here. Then on 31st March 2021, we will charge the depreciation by depreciation on machinery account. It is 1 lakh. Then at the end of the year, we will balance the account. That debit side is 10 lakh, credit side 1 lakh. So the book value or reducing value of the asset will be by balance carried down. The amount is 9 lakh. Then first year we total it, that is 10 lakh. Draw two parallel line to close the account. Here it's also total is 10 lakh. Draw two parallel line to close the account. Then we will on 1st April 2021, two balance brought down. That closing of today is opening up tomorrow. Two balance brought down. So the amount is 9 lakh. Then under 31st, at the end of the second year, that is 31st March 2022, we will charge a depreciation by depreciation on machinery account 1 lakh. So the book value at the end of second year is by balance carried down, that is 8 lakhs. So it is 9 lakh draw paraline to close the account. 2 paraline will draw, we total, that is we draw 2 paraline to close the account. Then at the beginning of the third year, that is 1st April 2022, we write 2 balance brought down. The amount is 8 lakhs. Then we are selling, disposing on, suppose at the end of the year, that is 31st March 2023, first will charge depreciation. If it is in the middle of the year, then 6 months will charge depreciation. So it depends on the date of disposal of the machine. So depreciation account, the it is also 1 lakh. Then what we will do? 8 lakh is the value, 1 lakh is the depreciation. Suppose we sold the machinery for 7,50,000, so we write by bank account. That is sales proceeds of the machinery, sales proceeds. So sales proceeds is 7,50,000. So that is profit of 50,000 on here under 31st March 2023. You will write to profit and loss account hyphen profit on sale of machinery or disposal of machinery. So 50,000 the profit under straight line method. So total is 8,50,000. Then it is done. You close the account. Then it is also 8,50,000. Draw 2 paraline to close the account. Then another is depreciation on machinery, that will open. Depreciation on machinery account, that will open. So what we will do? So depreciation on machinery at the end of first year, that is 31st March 2021, you will write depreciation to machinery account, that is 1 lakh. Then at the end of the year also, it will close by transferring to, that is same date, 31st March 21, by profit and loss account. Depreciation close at the end of the year, profit and loss account. So it is nominal account, it closed by transferring to profit and loss account. So this is first year over. Then second year also, on 31st March 2022, same journal to write to machinery account, because you are following the straight line method or original cost method or fixed installment method. So 1 lakh. So second year end means 31st March 2022, it will close to profit and loss account by the depreciation close by transferring to profit and loss account, that is also 1 lakh. This is second year. Then again on third year also, that is 31st March 2023, you will write to machinery account, that is 1 lakh. Then on 31st March 2023, this machinery account, this depreciation machinery will close by transferring to profit and loss account, by profit and loss account, that is 1 lakh. Then 3 years, 1 lakh, 1 lakh, it will close by transferring to profit and loss account. This is all about the depreciation under straight line method. So we covered the depreciation on straight line method, where straight line method where no provision is maintained. First we will cover no provision maintained, then with provision. This is straight line method. Then we will follow the diminishing balance method. Here we will write the reducing balance or diminishing balance method or written down value method. Diminishing balance method. Under diminishing balance method, first it is correct. Machinery account debited to bank 10 lakh. Then at the end of first year by depreciation 1 lakh. So the value is 9 lakh. Then second year beginning, opening balance is 9 lakh. But depreciation in second year, it is 10% on, not on 10 lakh, it is on 9 lakh. So the depreciation amount will, instead of 1 lakh, it will be 90,000. So the balance will be 8 lakh 10, instead of 8 lakh, it is 8 lakh 10,000. Then second year, third year, under 8 lakh 10,000, depreciation is your 10%, so it is 81,000. Then when we sold the machinery for 7 lakh 50,000, so total of credit is 0, 0, 0, then 1, 3, 8. 8 lakh 31,000. So profit is only 21,000. So profit is 50,000 under straight line method, 21,000 under reducing balance method. So again, depreciation first year depreciation machinery 1 lakh, then you have to close by transferring to profit loss account. Again second year, instead of 1 lakh, it is 90,000, and depreciation will also be closed by transferring to profit loss 90,000. In the third year, instead of 1 lakh, it is 81,000. So the depreciation closed by transferring to profit and loss account 81,000. This is all about the depreciation charged on straight line method and reducing balance method. But where provision is not maintained, suppose provision is maintained, we have to discuss the when provision is maintained, how accounting treatment will be done. So if provision is maintained, provision is maintained. So first journal entry will be, that is, we will purchase, suppose it is on same 1st April 20, we will write machinery account debited, machinery account debited 10 lakh to bank, being the cost of purchase of machinery through check. This is 10 lakh. Then at the end of the year, that is on 31st March 2021, we will charge depreciation to provision for depreciation. That means instead of writing depreciation machinery to machinery, we will write depreciation on machinery account debited, that is 1 lakh, and it will be kept on in provision to provision for depreciation account. This is 1 lakh. Then all of you know depreciation nominal account, it will be closed by transferring to profit and loss account. So profit and loss account debited, that is 1 lakh, to depreciation on machinery account. This is on first year. So second year we will follow the same thing, that is second year on 31st March 2022, we will write first depreciation on machinery account debited 1 lakh to provision for depreciation 1 lakh. Then it will close by transferring to profit loss account, profit and loss account debited to depreciation on machinery account. Then on third year also, that is 31st March 2023, we will repeat the same journal entry, that is depreciation on machinery account debited 1 lakh to provision for depreciation 1 lakh. Then profit and loss account debited to provision for profit loss account debited to depreciation machinery. Then 31st March 2023, this machinery is sold. When machinery is sold for, suppose it is given 8 lakh 50,000. Then what we will do, this provision for depreciation, that is accumulated provision for depreciation, closed by transferring to machinery account. So provision for depreciation is a liability, then it will close, we debit it. So we will debit, when the machinery is sold, we will debit provision for depreciation on machinery. The accumulated amount for 3 years is suppose 3 lakh, debited 3 lakhs to, that is, this is 3 lakh to machinery account. That provision for depreciation machinery is a liability, accumulated depreciation, it will be transferred to machinery account. As a result, the value of machinery was 10 lakh. On third year, its value will be 7 lakh. Then suppose we sold it for 8 lakh 50,000, or suppose it is 7 lakhs, let it be 7 lakh 50,000. Then the profit is 50,000. So write bank account debited, bank account debited, the amount is 7 lakh 50,000. Then the machinery value is, disposed of machinery value is 7 lakh. So machinery account debited 7 lakh. Then 50,000 the profit, will write to profit and loss account hyphen profit on sale, that is 50,000. This is under straight line method. Suppose under diminishing balance method, we will follow the same, but the depreciation will be changed year after year. So first year, at the time of purchase of machinery, right, machinery account debited to bank 10 lakh, then depreciation account debited to provision for depreciation 1 lakh, then it will close by transferring to profit loss account 1 lakh. This is for first year. Then for second year, machinery accounts for second year also will repeat this, but the amount will change. Instead of 1 lakh, we will debit it for 90,000. So debit 9,000 to provision for depreciation also, instead of 1 lakh it is 90,000. Then the depreciation close and transfer to profit loss, that is profit loss account debited to depreciation also 90,000. This is second year. Then in third year, what we will do? On third year, we will do depreciation account debited, that is 10 lakh minus 1 lakh 9 lakh, then 9 lakh minus 8 lakh 10,000. Under 8 lakh 10,000, 10% is 81,000. So 81,000 to the provision for depreciation 81,000. Then on third year, the profit loss debited 81,000 to depreciation machinery 81,000. So third year the machinery will be sold. Then what we will do? We will write at the time of sale, we will first close the provision for depreciation on machinery. So it is already, that is first year 1 lakh, second year 90, 1 lakh 90 plus 81,000, 2 lakh 71,000. So instead of 3 lakh it is 2 lakh 71,000. 2 lakh 71,000 will be closed by transferring to machinery account, 2 lakh 71,000. So the value of machinery will be now, out of 10 lakh, we already accumulated provision is 2 lakh 71,000. That means 1 lakh in first year, 90,000 in second year, 81,000 in third year. So it is 2 lakh 71,000. So the book value of machinery is now, that is 7 lakh 29,000, and we sold the machinery suppose for 7 lakh 50,000. Here it is 7 lakh 50,000. So machinery we sold 7 lakh 50,000. Then the profit is only 21,000. 21,000. What we will do? We will write bank account debited 7 lakh 50,000 to machinery account 7 lakh 29,000. Then the profit and loss account hyphen profit 21,000. This is all about the depreciation charge or accounting treatment of depreciation when provision is maintained under straight line method and diminishing balance method. So thank you for watching the video. I have given the clear discussion on this depreciation topic. In the next video, we will have a discussion on some important problems based on depreciation, which will be very helpful to plus 2 commerce final year students and also the plus 3 students and those who are continuing BCA, MBA for financial. It is very essential. Don't forget to like the video and share the video to all of your friends so that everybody will be benefited. Please subscribe if not already subscribed.